So let's discuss the crisis that's going on in middle America. So I'm going to show a couple of slides, and as I go through these slides, you're going to see absolutely what the problem is. So let's start with beginning middle income. That's about $20 an hour, okay? So you've got two sources of income. You got a source that you work for every day, and then you've got another source that you're going to use to replace the income that you work for every day. Sometimes people call this retirement, but let's take a look at the financial picture here. This person makes $35 a month, which is $42,000 a year, okay? Now, if you take a look at the person on the job on the left, they have $3,500. They have to pay taxes first, $700 out to taxes. That's 20%. So they got $2,800 left. Now, what is the first problem they have? They don't have all the money to spend that they made. So when they go out and create bills, they're doing it based on money that they don't even see. So if they buy a car, if they buy a house, if they can qualify for a house, for example, it's going to be based on the gross income, not the net. That's the first problem that we have. Now, over here to the right, you could get your money from a business as well. Sometimes people use a combination of both of these, but over on the right, take a look. $3,500 up front, no taxes are taken out. And then, of course, you got $3,500 left to spend. And determining how you spend that money and how you funnel that money, then you may not pay taxes at all. Now, how much money do you need in assets to replace this? Because you got to have something called income producing assets. That's $700,000 here at 5%. That's $35,000 a year. Plus, you'll have something like $5,000 to $10,000 per year for Social Security, approximately, on average. Well, you got some issues. Let's take a look. If we take the monthly cash flow that's needed, you need $3,500 up front, so we got that. Let's do all the things that we're supposed to do. $350 goes to charitable giving. That's 10%. Another 10% to retirement. Another 43% going to the household debt. That's $1,500 a month. You got recurring expenses. That's $1,200 a month. 28%. You got an emergency fund because we got to have one of those. We got some additional lifestyle expenses. That's all the little expenditures that we have, like little get your hair done, all that little stuff. Okay? And then we got total taxes, which is $700. Well, if you add all these together, that's $1,306. You got a shortfall, okay? You're $1,500 in the hole. So we negative $1,360, as you can see. So we need $1,500 to $2,000 on average to fix this problem. Well, think about it. Where's the person going to get that money? They're going to drive Uber, $2,000 a month? That's going to be tough. Part-time job? That's going to be tough. Go back to school? That's a 3-4 year down the road process and no guarantees on that. So they got a problem. Okay, let's take a look at the average U.S. household income. $31 an hour. Well, we got the same source one and same source two. That's $60,000 a year. $5,000 a month gross on the job. $1,250 goes to taxes. Only $3,750 to spend. Business is $5,000. No tax are taken out up front. Still got $5,000 to spend. Same as the last example. Now, how much do we need to replace this? If you have $750,000 at 8%, that's 60 grand. If you got $1 million at 6%, that's 60 grand. If you got $1.5 million at 4%, that's 60 grand. See, it doesn't matter what the asset is. It's based on rate of return determining how much you need to replace your income. Everybody's trying to do this. We call this cash flow success. But most people have no idea that they need $1 million to $2 million to stop working and have the same life they have today. Let's take a look. Here's the breakdown again. Let's take a look at the monthly cash flow needed. $5,000 a month, that's the gross income. 10% to charity, $500. 10% to retirement savings, $500. 45% to household debt. Remember, the financial world will allow you to have up to 45% in debt to income. That's how much you can have in payments relative to your gross income. That's already a problem, folks. $1,650 for recurring expenses, emergency fund. Look at this, total taxes. We got a shortfall. We spend everything plus $2,400. You need $3,000 on average to fix this. Going back to school is not going to do it. Getting another job is not going to do it. Okay? Let's take a look at the median income in America. Half of the people make more, half people make less, right? That's $75,000 a year. That's $6,250 on the job. Take out the taxes, $1,550. We got $4,700 to spend. See, people say this all the time. If I just made more money, I'd be okay. That couldn't be further from the truth. Because soon as we make more money, look at what happened. The first thing that happened, the taxes went up. Then we qualify for more things. We're going to get into that in a minute. Now we need $750,000 at 10%. That's $75,000. $1 million at 7.5%. That's $75,000. $1.5 million at 5%. That's $75,000. You see the same. It's the same scenario, even though we have more money. It's just a bigger piece of the pie or bigger asset category that we need. That could be stocks. It could be bonds. It could be real estate. It could be mutual funds. Whatever. Now let's take a look at the monthly cash flow needed. $6,250 is the gross income. 10%, $625. Charitable giving. 10% to retirement. Household debt, $2,800. See, the all this stuff is just higher. It's all higher, ladies and gentlemen. The government doesn't have a answer for this problem. Your job that you work for doesn't have an answer to this problem. These people made more money. They qualified for more things, paid more taxes, and still got the same issue. Just making more money is not the problem, folks. You need an additional $3,000 a month to fix this. You got a $2,500 shortfall. You spend up all the $6,250 plus $2,500. This is a problem. Let's go to upper middle income in America. See, America is built on the middle class, right? I'm showing you pictures of every single level inside middle America. Now, this is a person that's in management. They have what you call a real good job. Same source one, same source two income. They got $150,000 a year income household. $12,500 a month on that job. The taxes go to $3,125. $8,875 to spend. The business, obviously you can see that's the same. $12,500. No taxes come out of that up front. Let's take a look at the source two income. See, we got to replace this if we're ever going to stop working. If you're ever going to get free, $1.5 million at 10%, that's $150,000. $2 million at 7.5%, that's $150,000. $3 million at 5%, that's the safe income, or the safe category, right? So we're talking about things that are guaranteed accounts for example, in the 401k or the bond funds and stuff like that, where you're going to get lower rates of return. Monthly cash flow needed on $12,500 income. You see it right here. 10%, $1,250, 10% of retirement. So you got to give 10% to retirement. You need $1.5 to $3 million over here. Look at the problem. Look at the household debt, $5,625. Recurring expenses, $3,250. Same percentages. Emergency funds, $625. Additional lifestyle expenses, $2,500. Taxes, $3,125. We spent up all the $12,500 plus another $5,125. You know that saying, Houston, we have a problem? We got a problem. This person needs $6,000 a month to fix this problem. They need a total of $17,625 in total income. Folks, it's clear what the problem is. See, at myEcon, we're the cash flow success company. Now, here's our blueprint. Start a part-time or full-time business with our cash flow membership. Number one, minimize those taxes. Okay? Most people are overpaying. Get the W-4 corrected. So we're going to use tax advantage of a home-based business and non-overpayment. That's $200, $300, $400, $500 a month. Let's say it's $500 on step one. Now let's minimize expenses. Pay for the same lifestyle, but pay less for it. That's credit repair. We can refinance the car, refinance the home. We can take all our credit cards, put them on a 0% interest credit card, right? Well, we might save $300 a month here. Well, if we have $500 on step one, $300 on step two, that's $800 in cash flow. Why do we call it the cash flow success membership? Now take that $800 and drop it on debt elimination on step three. In 3 to 7 years, you'll be 100% free of everything plus the mortgage on average. And even if you just went on this just 2 or 3 years, you save, pick up another maybe $1,000 in cash flow to $2,000. So if you got $1,000 on step 3 on debt eliminated, plus $800 from 1 and 2, you got $1,800 a month to drop into the asset accumulation column. See, this is where the rubber meets the road in myEcon. We change lives with this system. Now, this was step 1 of the financial crisis. I'm showing you what the crisis is here. I'm going to move to step 2, and we're going to talk about the solution. How do we fix it? Let's talk about it.